Hello, this is Steve Malone with CompStuffX. Hope you're doing well today and you're getting some good trades. There are techniques to scalp the market using the Trader's Dynamic Index. And today I want to talk about counter trend scalping with the Trader's Dynamic Index. Now lately we've seen the market be fairly range bound, and intraday traders are looking for a way to collect a few pips along the way. The market seems to just barely be moving up and down, and by the time you find what looks to be a good trend and starts moving in a direction that could be a nice little trend, we seem to hit this invisible ceiling or an invisible floor, and the market kind of bounce right back. So what I want to talk about today is to look for a counter trend in the Trader's Dynamic Index. And I'm going to refer to this as the TDI hook. Now those of y'all who are advanced synergy traders, you've heard about the TDI hook, and I've been talking about this for years, but you can also use this technique down in a 1 minute and 5 minute charts for you intraday scalpers. Now you're not looking to get a lot, you're only looking to get 5, 10 pips, maybe up to 15 pips, depending upon if you catch it just right and it continues to make a nice little move. Now, bottom line, this is what you're looking for. You're looking for a high point in price action, and it may be like a double top. You'll actually may see a high price action type of look that gives you a short bias. At the same time, you're going to be looking for the green line of the TDI to go above the 68 and show also a sign of possibly rolling over. And the key to look for in the TDI is that it hooks over and crosses the red trade signal line and the blue volatility band. So let me give you an example here of the euro dollar. Again, this I'm talking about down a 1 minute or a 5 minute chart. The same techniques do apply on higher time frames. But since we're looking at scalping, I'm down a 1 minute and 5 minute chart. So on this euro dollar 5 minute chart, you can see that we kind of have this high in price. It comes down and it kind of gives us what looks to be almost like a double top with the midpoint here and the second high, which is lower than the previous high. And you can see here that the Trader's Dynamic Index, what we're looking for is when the green line goes beyond the blue volatility band, as it did here, and gets above the 68 level, as seen back over here. So here we have the green line up above 68, beyond the blue volatility band, and beyond the red trade signal line. Then it hooks back over and closes below the red line and below the blue line. This is your entry signal as long as price action is following suit. And here we have that double top as I talked about. We have a lower peak right there. You're looking to go in somewhere in this area, okay? And then you're looking for the trade to be 5-10 pips or so. In this case, is about 10 pips at this point. If you held in there, then it went down to about 15 pips. That's what you're looking for. That is a counter trend scalp technique matching price action with market sentiment. Let's go take a look at the Aussie yen. Got an example of catching it on the short side. In this case, we have over here, you can see, let me move this over a bit, you can see the market came down right here. The green line dropped below the blue volatility band, comes all the way down below the 32, and then hooks back up, kind of like a fish hook effect. Okay, then it crosses over the red line and crosses over the lower blue volatility band line, and now you're looking to go in right here. This is your entry point for a potential long. Okay, now be careful in this situation because you are going against the trend of the marketplace. The trend here, as you can see with the market baseline, is rolling to the downside. So again, this is a counter trend measure, and you gotta monitor what price action's doing. What I'm suggesting to you is watch what price action's doing here. If price action has a low, a high, and then a higher low, there's a chance it's going to continue pushing on up, and that's what we get. And we don't get a big move here. If I go from about this point up, that right there is about 15 to 18 pips in there, less your spread. Okay? And we had a similar situation over here where the market, again, below the blue volatility band, comes down, hooks back up, crosses above the red trade signal line and the blue volatility band. That's your entry point right here. And in this case, it's right about this area right here. Let's say we're in around this high and makes a move right here before pushing back down. That's only about 6 pips or so. Then it made this push up here of about 14 pips, less your spread. Now you can also do this down on a 1-minute chart. I picked the pound Swiss. It's a pretty active. Again, when you're down a 1-minute chart, you're really not looking for a lot here. Looking for about 5 pips or so, maybe 8 pips. Had a nice little move right here earlier where we got this drop below the blue volatility band. It comes down. You're sitting there patiently waiting for the next push to the upside here. And my suggestion is wait for the close of this coming back over. Wait for this bar right there to close, and if it closes up in this hook formation above the blue volatility band and the red trade signal line, there's your go signal right there. So let's say we get in here somewhere and the market pushes up. That's about 7 to 8 pips right here, less your spread. Okay, so that's about a 5-pip move right there. Sometimes what's going to happen is you're going to get this push, and see, this wasn't that much below the 32, and sometimes you're going to get this push up. It's going to falter, and what you're going to look for is, will the green line drop back below lower than this? Watch the price action. Price action comes down, and we end up with a double bottom. Okay, off the original signal here, we got a double bottom effect. It doesn't drop below than that and then starts working its way back up. When you have this inclining double bottom, it's kind of like a W shape. This inclining double bottom is seeing the Traders Dynamic Index. There's a good chance that we're going to see continual move back up. But again, what you're looking for is something that's more like this right here. It's well below the 32, crosses back over, nice little push to the upside here, and there's about 12 pips or so. Now the market did push down here, but notice this is the case of where price dipped a little bit lower, but look where the TDI green line, it only went down to about that far, then hooked back up, and you could have held in there. So again, counter trend trades, there's another one right here. Counter trend trades you can do. They're iffy situations at times, but when you've got this, the market baseline up high, green, red, way up high, and this case right here, this is a good example of possibly hanging in on this trade, because eventually look what this does. It went up high here, it bounced around, but if you followed the market baseline, this ended up being a decent trade. Obviously with a nice push down here, but it ended up being a decent little trade for a 5-minute. Had you entered right around this area here and followed this down to this low point, there's about 13, 14 pips. Then eventually this guy went down. There was about a trade there for about 35 pips. Well, folks, this is just a simple technique for scalping with the Traders Dynamic Index using a counter trend style of trading. Hopefully some of this information will help you in your trading. Y'all make a great day. Get some good trades. We'll talk to you next time. Bye-bye.